Hello friends, welcome to our channel Card and Loan Official. The reason I'm saying card and our channel is because it's your channel and it's my channel, and we both are working hard to ensure that the channel becomes successful. The objective of doing this banking, you know, doing this topic which is related to banking is to assure that our sales officers are educated enough, or they get information which they cannot get because they also have a very busy schedule, like since morning till evening they're out there on the field and they don't get time to learn more into depth. So this is one way of helping it, which I have told in my previous videos. And at the same time, it helps all the customers also, because when they are availing any credit facility, then it should help them too. They should know about the basic information which can be of their help. Before I proceed, I would like to thank you all for your time, your patience, your love, your affections, your liking towards the video, because this is motivating me to make more and more videos. So I request you all to share, subscribe, and don't forget to press the bell icon. And at the same time, please do comment on what are the other topics that you want me to work on, so that we can help you to get more and more information. So the topic that we are going to discuss about is, number one is balance transfer, number two is credit card loan, number three is, does a balance transfer affect a credit score, number four, how does a balance transfer work in UAE, next is balance transfer fee monthly, how much can I borrow on a credit card is the next question, can I turn my credit card into a loan is one more question, and last but not the least is, what happens if you ignore a credit card debt. So what we'll do is, we will address all the questions or all the topic of discussion in this short video. So let's begin the show. First is, what is balance transfer? Whatever is there in the presentation, you can read that, but let me explain it to you what balance transfer is. First of all, let's understand that a person has a credit card from bank X. Okay, his salary is somewhere around 5,000 dirham or 5,000 rupees or 5,000 USD, but his salary is 5,000. Let's take it as 5,000. You can put any currency in pretext, whatever you want, but he has a salary of 5,000 dirham. Let's take it like that. He has a card limit from bank Y, which is of 20,000 limit. Now he has used full 20,000 limit. Do you think it will be humanly possible for him to clear the dues with bank Y? The answer is no, unless or until he doesn't take money from a third party, friends, family members, relatives, colleagues, or probably other banks or financial institutes or credit unions. Now, to save his credit score, or to ensure that he doesn't get calls from the collection department, he will pay 5%, and the rest 95% of the outstanding amount he will not be paying, and he'll be revolving that 95% every month, which will result eventually in his bad credit score, number one. Number two, he will keep on adding interest on that. So there will be an interest on the outstanding amount. Correct? Now let's understand what he can do. A customer can avail a credit card from bank X with a similar or a higher limit, and he can transfer, depending on which bank has what offer, 80%, 90% or 95% of the amount of the credit limit to bank Y. Now once he clears the dues of bank Y, the bank X, the amount that he has transferred, he can convert that into an EMI. A lot of banks and credit unions and financial institutes, they give an offer saying that it will be on 0% if you apply within certain span of time. Or even if they charge an interest, the whole balance is transferred to a new bank, and in bank X, you can convert that into an EMI for 3, 6, 9, 12, 24, 36 or 48 months. There may be promotion that for 12 months there won't be any interest, or for 6 months there won't be any interest, but the moment you go for 24, 36, 48, they may charge interest. But what will happen is that your dues are already cleared with Bank Y, and the due that you had on Bank Y has been transferred to Bank X, which has been converted into an EMI. Now if a customer is disciplined, he will clear all his dues within the stipulated time frame in whatever EMIs that he has taken. So eventually, if he is organized and he wants to clear all his dues within certain period of time, or within the stipulated period of time, he will clear all his dues. Clear? Now let's go through the definition. A balance transfer credit card moves your outstanding debt from one or more credit cards onto a new credit card. Typically, with a lower interest rate, your total amount of debt remains same. So debt will not reduce unless until you keep on paying the EMI on time. Right? The next topic. What is quick cash or credit card loan? Now let's understand. First of all, let me complete a balance transfer. First of all, in balance transfer, what happens is you have to break the balance transfer word into two parts. One is balance, one is transfer. You are transferring the balance from one credit card to another credit card. So balance transfer is applicable only when you transfer the balance from one credit card to another credit card, right? Now, when you come to a quick cash or easy cash or a credit card loan, here you are transferring the card limit not from one card to another card, but from the card to the account. It becomes a kind of personal loan. Let's say a person has a requirement of a personal loan. Amount can be whatever, small, big, whatever maximum eligibility that customer can get. Now, if he wants to apply for a personal loan, he has to give documents. His application will be reviewed from scratch. His ECB will be checked, and so on and so forth. So, full process will be followed. Now, in credit card loan, again, different bank gives different offers. Like few banks says 90%, few banks says 80%, few banks says 95%. Depends on what bank has an offer. A person takes a credit card loan. He transfers his credit card loan from the credit card of Bank X to his account. No documentation is required, no credit review required, and whatever balance that you have just transferred from your card to the account, right? Now here the EMI is already, you can convert that into an EMI. If there is a promotion, you can convert that based on the promotion on 0% interest by paying some nominal fees. If it's not promotion and you are converting it for 24, 36 or 48 months, up to 48 months, then you will pay a nominal rate of interest. But the balance gets transferred from the statement to the account. Now that money which you have available in your account, you can use that the way you want to use it. It's totally on to you. Okay. So let's understand the definition. Loan against a credit card is a kind of personal loan. If you are using a credit card, you can easily apply for an instant loan against your card. Unlike a personal loan, a loan against a credit card does not require any documentation, what I have explained it to you. A personal loan normally needs a few documents in support of your eligibility. So when you apply for a personal loan, not from a credit card loan, then you have to provide documents for eligibility and your application will be reviewed from scratch. Does a balance transfer affect credit score? Balance transfer generally does not impact your credit score provided that you have transferred your balance from Bank X to Bank Y and the outstanding on Bank Y has become 0 or nominal, and the Bank X, the EMI that you have converted, you are paying it on a regular basis. So if you are following this, it will not get impacted or it will get marginally impacted, but generally it does not get impacted. So let's understand what it says. A balance transfer can affect your credit score depending on number one, which is if you open a new card to transfer a balance. Number two, what do you do once your balance have been transferred? If you simply transfer your balance, move your balance from the your balance around on your existing card, your credit card are not, or your credit score likely won't be impacted. It will not be impacted because you have transferred the money from one card to another card and you have converted that into an EMI and you are paying it on a regular basis. How does balance transfer work? What does it do? I have already explained that to you earlier. You have a balance with bank X, you transfer it to bank Y, and once you have transferred the bank to bank Y, you can convert that into an EMI and it may have, if it's under promotion, then you have to pay a nominal processing fee. If it's not under promotion, then you have to pay an interest. And different bank or credit unions or financial institute will have different interest rates. Is balance transfer fee monthly? Generally, as far as my information or my knowledge goes, balance transfers are not monthly. It's one-time fee which you pay it when you're taking balance transfer. But let's say if you take multiple balance transfers, then you have to pay multiple time fees. But one balance transfer generally has one fee. If there is any bank or financial institute who is charging monthly fees on balance transfer, that I'm not aware of that. But generally, majority of the banks and financial institutes or credit unions are charging balance transfer fee only once. Okay. Okay. So next is, how much can I borrow on credit card? Generally, I have already told you, it depends on different banks. Few banks it will be 80%. So 80% to 90%, 90 to 95% is something that you can borrow from your credit card. You can transfer credit card loan. You can transfer from your credit card to the account, right? So generally, it's low. 80, 90, 95%, something like that. So let's understand from here. Your credit limit is maximum. In total, you can borrow on your credit card at any one time. Your credit card limit is usually based on your credit score and in individual circumstances. Just like your credit score, it can go up or down. Okay. Can I turn my credit card into a loan? Of course, you can turn your credit card into a loan. That's what it means. The word credit card loan is that you have a credit card, and from that credit card, you transfer the money to the account, and you have the money which is in a form of loan. And here on credit card, you convert that into an EMI on whatever rate of interest that the bank is offering. So, of course, you can convert that into a credit card. What happens if, sorry, excuse me, what happens if you ignore a credit card debt? What happens? If you ignore a credit card debt, so generally, first of all, if you have taken a money from any bank or financial institute or credit union, it becomes your responsibility to return the money on time. Alright, if you don't return it, then probably you'll be getting a call from the collection department. They'll be calling you on a regular basis to ensure that you make the payment. Then your credit history will go down, it will be impacted. It will start depleting, if you don't pay it. Okay. Third is, of course, if your credit score is low, the rate of interest for any banking product that you are taking will be higher, generally in personal loan. If your credit score is high, then the rate of interest will be lower. Last but not the least, you can face legal issues also, because if you're not paying the money to the bank or the credit unions or financial institute on a regular basis, then probably you may have to face the legal challenges, legal issues, right? So it becomes very important for you to make the payment on time. Thank you so much, guys. If you have liked the video, please do share and subscribe. Don't forget to press the bell icon, and do comment on what are the other topics that you want me to make videos on. Thank you so much. Take care.